Geopolitics back in the forefront for investors, including rising tensions in the Middle East, former President Donald Trump's latest comments to NATO, and the ongoing war in Ukraine, among other things. One question that's come up is whether some of these issues could indeed be a risk to the growing U.S. and really global economy. Joining us now for more on that and where will be the best place to put your money is Alexis Crow, PwC Principal and Geopolitical Investing Practice Global Head. So a very good person to talk to about the effects of all of this on the global economy. So what I'd like to do is kind of go thing by thing. And I want to start with the U.S. election, because particularly for investors in Europe and policymakers in Europe, they're concerned about the election. But even here in the U.S., there are a lot of questions around what each outcome could mean for our economic and trade policies.
Sure, and thanks so much for having me back, Julie. Firstly, what I would say is it is a number one question that we're getting from executives, regardless of where they're sitting, regardless of the jurisdiction or the sector. And really what happens after the November elections for the global economy and what happens for the investability of the US. And certainly what I would say is there's a hyper focus on the two presumptive candidates. There's less of questions which should be asked about what happens to the Hill, what happens to Congress and the capacity for follow through on policy reform. Will we have entrenched political gridlock to pass legislation, or will we have greater cohesion? What happens to the Fed, which is politically independent in name, but there's a lot of questions as to what happens with the future governance of the Fed. So we also have to be careful about watching these other policy moves shake out.
So what are the answers to all those questions, Alexis?
Well, what I would say is, regardless of how things shake out, I think there are three key things that are impacting the investability of the United States. I repatriated from the UK 12 years ago for these three reasons. One of them, and they're interrelated, one of them is immigration policy. We've actually seen a significant tick up in immigration, and over the longer term, we have to look at the fact that population growth in the United States comes from immigration. Connected to that is innovation. We think about the United States being the second largest patent creator in the world after China, before Japan, and the extent to which immigration and positive policies can support innovation. And the third piece, which is interesting, is the so-called Inflation Reduction Act also highlights the extent to which it really restructured our entire infrastructure P3 model, public-private partnerships, and has generated a lot of investor activity into, I would say, sectors of growth for the future. And so those three things on the table, I would say, will outlast and endure whoever comes into the White House.
One thing, Alexis, that's interesting is, despite you have all this geopolitical conflict, so it's Russia, Ukraine, Israel, Hamas, Red Sea, the market, though, seems to be taking it generally all kind of in stride. Does that surprise you?
Well, this is where I would say that it's really monetary policy that moves markets, not necessarily geopolitics. So we saw the popping up of geopolitics really come into the investor and the C-suite with regard to the Brexit referendum, so going back to 2016, then the Trump administration, trade wars. And you can see some market movements, but by and large, it's FOMC meeting minutes, it's Sintra and the ECB is really what's moving markets. And so now, are investors ignoring that at their peril? I would say that certainly what's going on in the Red Sea is highly underestimated by market participants at the current moment.
Why do you say that?
Well, if you think about just the Straits of Hormuz and how integral these are to global energy markets, the extent to which exports from the GCC and liquid fuels and refined products like diesel are making up for supply that's missed from Russia, for a lot of European importing countries, this is really, truly significant.
When are we going to start to see more of an impact? It seems like at least a lot of companies that we speak to have figured out either they're still getting through or they've figured out other ways to get through.
If you continue to see an escalation of attacks that may or may not, and counterattacks that may or may not be deemed to be effective, I think that's one way of looking at it. Another thing is, if we think about just the price of oil at the current moment, we're currently in the nat gas season where everyone's using nat gas to be able to support electricity and heating. But when we move into the summer driving season in the United States and then transport for fuel in Europe, I think you could look at a different scenario with regard to oil markets.
Interesting.
What do you think, Alexis? I'm going to get your take on how you think, or what you think Chinese officials, Chinese authorities make of our election here. What do you think they think about Trump and Biden? Do you think they have a preference?
I would say if you think about the mindset in Beijing, there's certainly a capacity to think out over the longer term in a way that we really don't have in the United States. We're prone to electoral cycles, and really if you start campaign financing 2 years into the 4-year cycle, we think in very different, ways of looking at the world. So I would say that probably the Chinese government's going to be patient no matter who comes into the White House. I would also say that it's very clear that both sides of the fence in the United States, both sides of the political aisle, are deeply antagonistic toward China.
It's honestly the one thing that they seem to agree on.
Absolutely.
Yeah.
Absolutely.
So as you look across the geopolitical landscape and you look at the next 1 year to 5 years, what is the single thing that would pose the biggest risk to global economic growth amongst the things we talked about and maybe something we haven't talked about?
Firstly, I would say if you look at the price of oil and you plot that over global GDP, you can see very quickly the extent to which $100 oil can quickly prompt and catalyze a global recession. So that's, I think, the first thing that we would be focused on is as the conflict in the Middle East becomes more deeply entrenched, with perhaps not a clear end in sight, an end game in sight. I think that's number one. Number two is the extent to which the tension between the United States and China is driving a fragmentation of global supply chain activity. So that's actually, moving a lot of exporters and manufacturers to move from that just in time to just in case to just in time mentality. So that's also driving up pricing. I would say that the extent to which that also is creating opportunities is one to consider. So the extent to which the diversion of capital from mainland China into India, into emerging Asia, a lot of investors seeking EM exposure ex-China, I think it will create opportunities. I'd also say that the energy transition is creating opportunities, from the unit of carbon all the way down to the renewable space. And so I think, we look at some of the cohesion of different actors around creating corridors and mineral supply chains, I think will be interesting.
And for viewers who are listening right now, Alexis, investors looking for other ideas too, one big theme you say to focus on looking ahead is longer lifespans. What does that mean exactly, Alexis? How do you invest in longer lifespans?
It means different things in different geographies. So in the US, I would say that we're very much accelerated down the longevity spectrum, where you have people going for blood transfusions, et cetera. But I would say that while our healthcare system remains deeply broken, you still see US consumers pivoting and spending more out of pocket on alternative forms of medicine. So I would say that's one thing. In Europe, this could be medical tourism, just given France is the most visited country in the world. The medical tourism space there is probably undersaturated. It's heavily fragmented. I would also say look at wealth management in Japan. Right? The yield on Japanese bonds, not necessarily very attractive. And so if I'm thinking about supporting, household wealth creation for pensioners in Japan, I think that's also an opportunity.
Interesting. Another reason to go to France, I guess. Thanks, Alexis. Thanks so much. Good to see you.